All right, good afternoon, everybody. Hope you enjoyed your weekend. Let's go ahead and jump right into this. Got 5 stocks that we're looking at coming into this coming week here. So, a little bit of everything, I believe. Almost a little bit of everything. First one that I'm looking at is going to be AA. All right. AA, I like for a strangle. Now, yeah, it's been very bullish and made an all-time high, but it did pull back all the way to that 200 day, and now it's kind of consolidating right along it. So I'm looking at like a delta neutral strangle here, giving it a little bit of run room on both sides. So I'm looking at selling like an 85 call well above multiple levels of resistance here. And then I want to sell a 45 put well below multiple levels of support, right? A lot of support levels covered. So this is going to give wiggle room to both sides should it decide to move heavy. So when you look at AA going into July monthly, I want to sell those 45 puts and those 85 calls. Ideally, I would like to get at least $1 on this play. It's going to be an 86 pop. Like I said, delta neutral, $100 for $600. Okay, and as you can see, you're going to be about $10 past the expected move to the downside, and you're going to be about $15. Hi, O'Malley. $15 past the expected move to the upside. So all in all, it's a really good play here. A lot of wiggle room to cover. All right. The next one, come here, is Bank of America. Bank of America dropped. Okay. It rallied up here a little bit, rejected just before the 50-day moving average, and and started heading back down. Broke below both the 8 and the 21, which are stacked on top of each other. So what I'm looking at is this one to just continue breaking down again, and it's got run room all the way down to really 34. Okay. Yes, there is an upward momentum squeeze, but I'm expecting this to kind of lose that momentum and actually fire short. Okay. So the 38 call spreads where I'm looking, which is going to be right above the 50-day moving average. So you're going to have a lot of levels of resistance in your way, okay, in case it does decide to push up. So with this one, BAC, also July monthly, okay, looking at just right at a 30 delta play. So I'm looking at the 38 calls, selling those, buying the 40s, $2 wide. It's not quite 1/3 the width, but if you can get 50 cents for it with 2 contracts, okay, that'll be $300 of a risk and $100 of potential profit. You get nice 34 short deltas and a really good 73 pop. Okay. Next one's going to be LYFT with a short skewed strangle. Okay. So LYFT really died here after this earnings and has been in a small downtrend, kind of holding this 1630 level. You see upward momentum is coming into this, so I don't expect it to drop too much further, but I do want to lean it a little short since we are still stacked to the downside below the 8 EMA. Okay, so if it does do very small moves down, you are covered to make profit on the downside with this one. So I'm looking at selling a 23 call, which is going to be right up there at resistance, right at that high. Okay, and then selling a 12 put, which is going to give you a $4.50 almost past the 2-year low to work with on this one. Excuse me. This one will be in July 8th, so 33 days, that weekly. Now the options aren't the greatest, but the spreads are fairly tight. So what I would do first is probably try this. If it doesn't fill, then consider jumping over to a monthly. All right, you probably will be able to get a little bit further out of the money too by doing so. But going into July 8th, I would like to try to get these 12 puts, right? $3 past expected move. And these 23 calls, about $3 past expected move. I want at least 25 cents for it. That way, you know, it's less than $1,000 in buying power. It's $100. You do get your 9 short deltas. And it's an 89% probability. Really, really good odds on this one. Okay. The next one's going to be NVIDIA. I like NVIDIA long. Yes, it did reject this 50-day moving average on Thursday. We still got a good squeeze. We're seeing these moving averages curl over, and the 8 and the 21 are actually stacked on top of each other right now. So I'm expecting to cross over if markets open green, and this to bounce off and return back towards that 50-day. And I want to see it break through that 50-day, because then it's got some run room all the way up to about almost 230 here. Okay, and still got a good light squeeze on it, which is fired 2/3 the time long. So odds are in our favor that will fire up. So I'm looking at selling a 170 put spread. About what is that? $17 past the close on Friday. A lot of wiggle room here. Not quite down at the low unless you got an account that can sell it naked. But like I said, I just want to see it bounce off and return back to the upside. So on NVIDIA, July 15th was 170, 165 put spread. $1.35 plus or minus a few pennies. You could even probably go up to the 175s here, get a little bit more in credit, but I prefer in this market to have a little bit higher in probabilities than I do in credit. So I like the 170, 165, $1.30 or better, 68% probability. Really good odds on this one. Okay. And then lastly here is going to be Twitter. Okay, Twitter's not doing a whole lot lately, especially with everything going on with Elon. So I just want to sell a slightly long skewed strangle, right? We have one that's neutral, short, and now long. And I want to go ahead and sell a 52.5 call up there at resistance. A little bit here, well past the 200-day. You got a lot of run room coverage. You're talking 21, 50, gap fill, 200-day. You got a little bit here at 51, and then again at 52.5 before this one here. So a lot of coverage to the upside. In all reality, it's been in this since December, really. It's been down here. Okay. So even before Elon. And then I'm looking at selling the 28 put, which is going to give you a lot of wiggle room to the downside, well below the current lows down here. So you've got a lot to work with on this one. I'm just really expecting to go sideways until they figure out what's going on with Elon. So with that one, Twitter, July monthly, those 28 puts, you're going to be 1, 2, 3, 4, 5, almost $6 past the expected move. And then the 52.5 calls, again, you're going to be about $6 past the expected move. I would be cool even all the way down to 50 cents, but call it 60 cents at the mid price. 2 contracts. Okay, it's $800 in buying power. It's $120 in credit. Slightly long with just shy of 4 deltas and an 86 pop. So really, really good odds. Okay. That's it, gang. That's all I got for you. I am curious, y'all. I am considering opening up my Discord chat room to everybody here. I got 4 rooms, so I'd be opening up one of the rooms for everybody. If that's something that interests you, reply back to the email. And if you're watching this on Facebook or YouTube, leave a comment in the comment section if that's something that you would like to see in the future. Anyways, have a great rest of your weekend. Take care, and one day I hope to see you in chat.